Alrighty, Blue Chip Trader here on Monday afternoon with about 1 hour left to go in today's markets of September 24th. And before I go into the liquid momentum focus list of what I wanted to highlight here real quickly this afternoon, let's just take a quick look at what some of the markets are doing. If you do have access to the charts, you can look at them. I will update the charts as I also go through the screen here. Starting off with the NASDAQ, did make a pretty solid recovery effort going on here from this morning's early opening weakness. Taking a look at the QQQ chart here on the daily, we did see price open below last Thursday and Friday's lows, and buyers kind of stepped up right there along key support level and launched them right up to the first hour back to the neutral zone, and price has pretty much been tiring out since. I am hearing in the background that there is some potential movement going on in IBM, that's International Business Machine. So IBM seeing a little bit of looks like a little bit of a bid here as I'm speaking. So if you're looking for some volatility right now, let's keep watching IBM. Moving right along to the markets, I do have the Dow Jones trading down approximately 159 points. That came under pressure early this morning. Taken in context of where it's been over the course of the last week or two, where it's been running up multi-days to fresh new high territory, highs of the year. And pullback was basically inevitable, and this seems to be the first day of that potential pullback today. Same story with the S&P. Saw a new high last Thursday, clean breakout. Did stall a little bit on Friday's quarterly expiration session. And here we have price just pulling back in context of a multi-week uptrend after getting a little bit too far ahead of itself. Mid-caps, MDY, more of a, let me pull it up on the chart there, sorry. More of a sideways range going on the last 2 or 3 weeks in, actually it's more like 4 weeks from mid-caps MDY, but still holding on to the support level there as it consolidates against year-to-date highs. Let's just keep them on the radar. Obviously a breakout to the upside or downside is going to be pretty significant and create some momentum, so need to keep that out there. Same with small caps, IWM. Did see a little bit of a consolidation the last 3 or 4 weeks. Currently holding this key support level right there along those prior June, July, August breakout point, which was right around that 169 level. It's also the 50-day moving average that's kind of holding up there. It's that pink line on the screen. So just another zone that we have to be watching out for, a key inflection point. Obviously, if we get any sort of aggressive selling this week into quarter end, then that could trigger some further distribution activity down to, I believe this is the 100-day moving average, this red line here, and back down towards these mid-August or even these July lows. So just something to be aware of, that the IWM and the mid-caps seem to be at somewhat of a key inflection point. And I would also say that the NASDAQ 100 is also at a pretty key inflection point here as well. Needs to really kind of maintain this 50-day moving average strength, which is this pink line right here. If it cannot hold here, more than likely you're going to see some attempt at the bears and sellers to really kind of put pressure on this and take it down. So something to think about going into this quarter's end, this week. So good stuff. All right, so now moving right along, we're going to go to the liquid momentum focus list here. If you are not familiar with it, it can be found at the top under the dual in play page, underneath the investing and trading drop down, and that's about just over halfway down there, just underneath the word technical analysis. It does say liquid momentum, and if you're not familiar with it, this is what we consider to be the top 50 stocks of the market, and the 3 main criteria that you have to know about is the liquidity. So basically each one of these stocks trades a minimum of 1 million shares on an average daily basis. momentum, with liquid momentum. That's the outperformance or the relative strength of these leading stocks in compared to every stock in the market and compared to the S&P benchmark. We want the ones that are going to be outperforming each other. And here are we use different types of weightings on a 1 month, 3 month, and 6 month basis. So gives us that little bit of a outperformance on an absolute and relative basis on that time frame. And then finally, the last one is going to be volatility. Volatility is measured by ATR divided by price. ATR being the average true range over the course of the last couple of sessions. Typically, it's a 14-day industry standard that's used for ATR calculation. And then we put that over price, and it comes up with a percentage to tell us, give or take on any given day, how much of a percentage move you can expect from this stock. And those are the three main criteria that we follow. Overall, these tend to be market leaders, and they inherently, because of their outperformance and their volatility and their volume, they inherently have this bullish vibe that typically goes on with them. So if you have even the basics of technical analysis 101 stuff, and you're looking for those bullish candlesticks, those engulfing patterns, those doji patterns, or even if you're not a candlestick guy and you're looking just at the 50-day moving average or a pullback to the 20-day moving average, or a consolidation breakout, and then if you're an indicator person, if you're using a MACD, a stochastics, or RSI, or any other of the hundreds of other indicators that are out there, I would almost guarantee if you could just slap any of those onto one of these 50 stocks, then you're going to see some really strong signals here. Now, on that same note, there is a caveat where if price action is aggressively selling off in these names, that is a concern. That means the leading names, the names that are outperforming, they're under distribution, and yet that is typically a sign of broader market weakness. If the market's not defending their leaders, there's usually an underlying or broader market issue at hand. I've seen it over and over and over again. So one of the things we want to also pay attention to with these leaders is if they do break out for like a day or two, and then they kind of retreat back in very aggressively. That's also another, that false breakout type of movement is going to be a pretty big concern as well as breaking below key 50-day moving averages and support levels and uptrend lines over the course of the last couple of weeks. But overall, pretty solid list. If you're looking for good names with good volatility and that leading market characteristic that you want to see in stocks, it's just really good solid list to keep track of. As blue chip trader, I would say that probably 75% of my trades that I take on the site come from this focus list, particularly my swing trades. My swing trades are usually going to be centered around this leading momentum focus list for sure. All right, so going on to today's update, hopefully you looked at that page. I'm just going to highlight the few names that I thought were pretty interesting here. And the first one we're going to start off with is going to be Apple, ticker AAPL. Okay, so AAPL, Apple. Obviously, it was a big spike on Friday. I believe they introduced a new phone, and they also had expiration going on. And we also had that weird little new ETF that came out, XLC Communications, one from the Spiders that we covered on Friday too. So we did see a couple names get pulled out of the technology XLK and make their way into more of a communications XLC ETF. So there's a lot of rebalancing going on and quarterly expiration going on. So big spike in volume on Friday for those reasons. But for the most part, price action wise, pretty interesting going on here. We do have it underperforming a little bit here in September, but again, take everything into context. Look at how this stock performed back in August. We had a nice clean breakout, gap up, after almost almost 2 or 3 months of sideways trading, and then price broke out, consolidated, and then trended higher above the. I think this is the 18-day moving average is what Jim has on his charts here. Let's just go with 20 to round it up for that sake. But nice little pullback there. It looks like it was defended, popped a little bit, and then came back in. Overall, we have a pretty decent looking support zone in play here, right around 215, which lines up with the mid-August consolidation pullback area. So going forward, you definitely want to make sure that that 215 level continues to hold as support. Ideally, price will break out to the upside over the 222, 223 area, and that will propel the stock into higher ground. 223 is right along last week's highs, so that's something you definitely want to consider for a new leg higher to develop, particularly as the stock has been in almost a 3-week pullback consolidation phase. So that, for me, as a swing trader and a focus list leader, being one of my top priorities here, you have a couple options. Maybe you want to participate with maybe a quarter size, third size here around 220 and risk the $5 down to 215. Or if you're a little bit more conservative and you want to jump on board the momentum, you wait till the 223 level gets taken out, and you're buying into the momentum and you're buying into the strength. It's you got to kind of pick and choose what the market's going, what the market gives you, and what fits best into your own comfort zone. But those are two different ways to play it. A third way to play it too, and I have seen a few subscribers do this. They do actually do something of a covered call. So they, in that sense, if you trade options, you would basically buy a little bit of the stock here at 220, and then you would sell the weekly or the monthly October, say 230 calls. So in that sense, if price moves higher up to 230 before expiration, you will be able to lock in a partial profit on your long stock position. Or if it doesn't get to that by the time your expiration comes around, you collect the premium on the trade for it. So basically you're getting paid to wait for the next move. And if stock does come down to the 215 area, you still get to capture a little bit of a premium. So even though you'd be taking a little bit of a loss, that will be offset by the premium that you collect on the covered call. If you're familiar with options, you know exactly what I'm talking about. But just, again, these are really good names to kind of do that strategy on because of their underlying inherent uptrends and their relative outperformance that's already been in effect. So really nice, good stuff there. Let's take a look at that. All right, so next one I highlighted was AMD, Advanced Micro Devices. Probably the strongest semiconductor stock out there so far over the last 6 months. Just absolutely stellar gains. Continued to really kind of accelerate here throughout the summer and started to consolidate a little bit here over the course of the last 2 weeks. Last week was an inside week, and it looks like this week is also starting off inside of last week's range. So I'm not really viewing this as a bearish development. It just looks like the stock got way too far ahead of itself and is undergoing a consolidation phase right now. It's on my radar as a potential long because I do like these type of patterns. Usually when stocks run up too far too fast, you have a whole crowd of people that think you have to short these things because they're going to come back in. It's that they're playing the mean regression. In my experience, the longer that they don't come back in, and they just consolidate sideways, you're just setting up a short squeeze potential. All the shorts are piling in, waiting for the breakdown, and eventually it's just going to break out to the upside. Something like a Tilray, T-L-R-Y, where it goes more into like a parabolic mode, this usually typically does not consolidate up at these high levels. It usually does retrace and give back a lot of those, and that's why you have a lot of these people, there's a lot of short sellers, they get in that mindset that things are going to come back in just as fast as they went up. So something like an AMD, I don't really see that happening. Yeah, it went up about 40-50% in 2 months in a month's time or so, but that's nothing compared to the what was it, 500%, 400% in Tilray. So it's also a much thicker name, and I think they make money, AMD, compared to Tilray. Bigger, just more valuation going on there and whatnot. So again, this is a nice looking chart here. Definitely on my radar. Keep that one out there. Amazon, all right, Amazon, AMZN. Everyone knows this is a strong uptrend. We did have that little probe and breakdown to fresh September lows here today. First time it's actually gone underneath its own 50-day moving average since the spring. We're talking back in April was the last time that happened. And of course, it got bought up. I mean, it's Amazon, so that's that little bit of a sign of weakness where I said these leaders, when they take out these uptrends and they take out these 50-day moving averages, they can lead to heavy, aggressive distribution days. However, at the same time, you want to watch very closely to see how they react to these key inflection points. In the case of Amazon here, price was quickly bought up this morning. Price got back above the 1900 level, and here it is sitting back near session highs as we go into the afternoon. So overall, I like this price pattern. If you're an Elliott wave theorist, you got a little bit of an ABC correction off the early September high, and all that means is that you had one leg down, tried to recover, and then you had a second leg down. And the psychology behind that is you had this first wave of dip buyers on the first initial pullback, and they got a little bit of a profit, and then they started to get nervous, and then the sellers jumped back in, they knocked it back down again, they shook out all the weak hands in the stock. You also shook out weak hands, breaking back below the 50-day moving average to a fresh September low here in early trade this morning. You also took out last week's lows, which triggered some more stop orders. So you have all this scared long positions kind of getting out of there, shaking out of weak hands, and then you have it followed up by pretty solid buying pressure that's been going on today, just kind of keeping the price up there and grinding it higher. So that does have potential for price action to continue higher. And again, how you want to trade it's up to you. Whether it's a half-size position here, a quarter-size position, and then you put your stop near today's lows, that's a good methodology. The covered call methodology we just described is another way. Or you can just wait. Wait it out, see if last week's highs are taken out at the 1958 level, which would be right around Friday's highs. So it's your call. You like the stock, those are different ways to approach it. Or you can actually, if you ever really want to go into anything else, you can take a look at the intraday chart, maybe a 60-minute time frame. I wouldn't really go as low as below a 30-minute time frame, particularly on a stock like this because it's such a volatile name. You go down below 30 minutes, you're going to kind of lose the bigger picture of what's going on, and it's going to be a whole lot more of that day trading and scalping environment that's going to be causing a lot of noise, so to speak. But if you go out on like a 30 or 60-minute time frame on these big institutional names, you can have a better sense of the flow of money going in and out of stocks over the course of an hour. When you see the flow and the developments and patterns and charts happen over the course of an hour, that's usually not your mom and pop. That's usually a institutional traders getting involved and the actual bigger money getting involved. All right, so moving right along. I did actually throw a cannabis stock out here. So this one's been on the focus list for about 3 weeks now. Maybe even a little longer since the end of August. It's consolidating, and this falls into that wheelhouse of what I just stated, where you have these stocks that show these strong run-ups in such a short time frame, 80, 100%. If they don't come flying back in and giving up a lot of the gains, and they wind up going into a consolidation mode near their highs, they're just building up that short interest in the stock. So you got to be a little bit concerned about this if you are short, given the fact that it's holding up pretty well. So it's one of the reasons why I threw it out there. I do not own this stock right now, but just looking at the price action that's going on here, it's definitely not bearish. I'll say it's more of a neutral tone going on here. Obviously, the distribution gap up and sell-off last week is a little bit of a concern. It does show that there's some sellers above the 54-55 area. However, we had two inside ranges last Thursday and last Friday. Price opened lower, trying to get below this 20-day moving average, and was immediately bought up at the opening today, and now you have an outside day. So you have two inside days followed by an outside day. That's pretty constructive behavior in my eyes. Also, given the fact that this stock is consolidating in this range here around 40, let's go 45 to 55. It's a little loose, but still in somewhat of a sideways range from where it was trading 3 weeks ago. So I'd give it the benefit of the doubt that it does have further upside potential. If this stock does start to lift higher back up through the 55 area, it can definitely be off to the races again. So keep that on the radar. You're playing this one for a short squeeze, no doubt. All right, the other one, CRM, that's Salesforce.com. The stock has just been, this has been on and off the focus list for probably about 2-3 years now. Just an absolute stellar stock, especially over the course of the last year or so. Just grinding its way higher in context of a multi-month uptrend. Every dip below the 50-day moving average is very short-lived for about 2-3 sessions, and then it's just bought right back up. This is one of these stocks that if you were to just slap on a short-term stochastics or RSI or even a MACD, you're going to see that just textbook. This is a textbook example of, buying oversold in context of an uptrend and waiting for those pullbacks to show some follow-through. Just a really strong performer. It has served me well over the course of the last year or so on buying the dip. So really good example of a strong stock that you want to see in your leader here. Again, the high volume due to some imbalancing going on to the quarterly expiration last Friday, but nonetheless, here we are today, opened a little weak and really made a strong reversal and trying to get back up to those highs. So very strong performer, Salesforce CRM. All right, next one on the list is Lulu, which again, you can't deny the price action and the strength that has been going on in this retailer. They continue to surprise me. You look over the chart over the course of the last year, and it's just gap up on earnings, consolidation, gap up on earnings, grind higher, gap up on earnings, consolidation, grind higher, and then you have another gap up on earnings, and now it's in like more of a consolidation, grind higher mode. Until that cycle stops of just gapping up on earnings, grinding higher, consolidating, you can favor this one on the long side. Obviously, if price does start to come back down beneath the post-earnings gap low, which is in play right around the 150 area, that could be a little bit of a concern. But otherwise, that's your main concern. Your inflection point is that 150 level. Otherwise, you got to give it the benefit of the doubt that it's going to continue to push higher above that 160 level. Good stuff there with Lulu, L-U. MPC, this is Marathon Pete. So I know they're in talks with merging with Endeavor, ANDV, and so that's probably, I think that's coming around real soon here at the end of September. So the shareholders, they had a vote on whether they wanted cash or whether they wanted stock, and all those deadlines are coming about here. So with the potential merger drawing very soon to an end here, the stock is actually getting a bit higher here and breaking out. So it's again, relative strength overall in the space. We do have energy as a whole, perking up here over the course of the last week or so. It started to break out over that resistance level here in the XLE. We do have crude oil at trading back at its year-to-date highs. That's the chart of the USO. It did actually, it actually did notch a fresh year-to-date high this morning in the USO. And even the gasoline ETF, UGA, that's Uncle Georgia Alpha, that is also breaking out above its own 3.5-month resistance level as well. So gasoline prices are on the rise, which answers a feedback that came in asking why are airlines and truckers getting hit. Well, it's probably mostly due to the fact that we have a rise in gasoline and oil prices. So Usually after a strong run-up, you do see that the transportation names start to pull back in on higher gasoline prices. But moving right along, I do think MPC is definitely one to watch. In fact, we've seen a couple of refiners showing up on the liquid momentum focus list over the course of the summer. So here's Valero. Nothing great going on here in VLO, but that breakdown last week should have saw some follow through to the downside, and instead we have this little 3-day recovery effort. If this can push higher again over 117, 118, that would be a pretty bullish sign. It would be a sign of a false breakout with price moving to the upside. So definitely keep that one out there on the radar. And then even Phillips 66, another one, pulling back in here a little bit. Again, notched a fresh multi-month low last week, and then trying to make a recovery effort. So keep that there. And then I'll take a look at Holly Frontier Corp, HFC. Same situation, kind of a grinding sideways over the summer, but should have broke down and trying to make a comeback here. So again, keep these refiners on the radar. Could be some interesting trades setting up here in coming sessions. But the MPC, definitely the leading stock going on there. NVIDIA, another strong semiconductor name, kind of lost some of that momentum that was really strong and aggressive in the latter half of August that broke it out to new highs. But here we are with this 2 to 3 week corrective ABC type of pullback off the highs, and price is sitting here probing the 50-day moving average and getting some bids there as it also tests the pivot point from that breakout in late August, all around that 260 vicinity. That is a key inflection point there that you're going to want to kind of maintain and monitor going forward, whether you're bullish or bearish on the name. If it obviously continues lower below 260, that could spark some further selling pressure, and if it holds here, you know, you can take a long in the stock right here and risk about $5-6, and you have potential for it to maybe get a new leg higher, as high as back up to 280, 280. What is that? 285. So risking $5 for a potential 15 to 20 point move. That's 3 to 1. I mean, this could be a pretty decent trade here. Again, quarter end, maybe this is still on the books of a lot of portfolio managers. I'm pretty sure it is. And, you know, based upon the performance, you could easily see this one move a little bit higher here. It's on my radar for sure. I might actually throw out a long in it, either into the close here for a half size position or third size position, or I'll just keep it on the radar tomorrow to see how the broader market behaves. Moving along, PANW, that's Palo Alto Networks, another strong leader over the course of this year. A little bit more of a volatile name. It is a little bit more choppier than some of the other leaders. It does have a tendency to grind its way higher, then get these 2 or 3 day aggressive pullbacks, and then grind its way higher, then kind of then pull back aggressively, then grind its way higher. So it could be a little nerve-wracking, but the key thing here is each aggressive drop was followed by buying pressure that took it into higher ground. So that's a sign of accumulation, higher highs, false breakdowns. That is kind of this hidden accumulation that's going on in the name. And fast forward to today, we had an inside bar, it looks like, on Thursday and Friday, inside ranges, similar to CRM, and you had this little bit of a 2-week pullback going on. Prices opened lower, and they were defended in the gap. I'm pretty sure there was an earnings gap back on November 7th, but they were defended inside the gap. That's your key inflection zone, your line in the sand to take up a long position in what looks like a bullish flag pattern that could lead to higher prices. So pretty good action in PANW. 2 more here, and then we'll wrap things up. I think I'm going to have Gavin come on in here soon. Square, we all know that this one has been really strong here during the summer. Just steady uptrend, every pullback bought. again, same story here. You're going to see the same narrative going on here with these liquid momentum focus list leaders. These are leading names, and you're going to hear me say the same consistent things over and over. Higher highs, pullbacks being bought off the 50, off the 20s, consolidations leading to breakouts. Any sort of attempt to take them down below consolidations that immediately reverse a day or two later and grind higher. Those are constructive signals, and those are like the main focus points that I've learned over the years, just monitoring these stocks, and that have just been really kind of making them the true leaders in this market. But nonetheless, here's Square. Looks like it got a little bit far ahead of itself in August, went through some sort of tight consolidation phase, and then started to succumb to some selling pressures last week. And then overall, it's just still in this potential ranging pattern that looks like it could be developing here off of that. Let's be a little bit generous. Let's say 83, 82 looks like a potential support level here that could be developing. If it cannot hold here, well, then you're going to be looking down to the 50-day moving average around 77. But for the most part, I'd say this is looking like a potential 2-3 week support level in development here around $82 that could just see the stock ranging around the $90 vicinity going forward. So again, quarter end, strong performing stock, tend to see a little bit money flow go back into those names. And then finally, this one was interesting. This was VFC, and this is one that I wasn't really expecting to make it onto the charts, but it has been holding up pretty well since that earnings report that came out in mid-July. Gapped up a little bit, and then it's finding gap support. It did close the gap about 2-3 weeks ago, and as soon as it closed it, buyers stepped in 2-3 days later to defend it right off that $89-$90 area. And then prices just going in a narrow range consolidation. And anyone that knows my style, there's usually 3 different types of setups I like. Stocks that are kind of in like the falling knife phase, but usually after multiple days, something like down over 10% over the course of like 5 or 6 days. That's usually the falling knives I like to go after. Usually it's not the first day of a trade. It's after a multi-day aggressive sell-off that I usually start to focus on more of a scale in for a bounce play. Pullbacks in context of uptrends, and I've highlighted those multiple times amongst market leaders. And then the third one, it would be a narrow range consolidation that's developing more so on a weekly time frame. I really like it when the ranges are inside weeks on a weekly time frame, and you just start to see these daily doji patterns and these just no price action going on in these stocks, because it just tells you that it's just kind of grinding sideways, and eventually it's going to set up for some more of an explosive move. Now, whether it's to the upside or downside, you can't really tell, but because it's a focus list leader, I always tend to give the benefit of these names to the upside. So it's one of those things where something like a VFC, I want to keep it on the radar going forward this week. And if it starts to bust out above last week's highs, right around that 90, again, you gotta sometimes be a little bit more generous, but let's say I'll have what I do is I set alerts for like 92, 92.50, 92.75, and then 93. But just to get me looking at the name if that does start to move through there. But usually when this stock starts to break through 93, if that does happen, I already want to be on at least a third or half size position when that happens, and then I'll look to add maybe 93.50 or 94, hoping that it gets back up to the August highs around 95, 96 to start scaling out. So again, this is how you want to play these tighter range consolidation plays. All right, with that said, hopefully you learned a little bit here, and as I've stated before, this is going to be most Mondays I'm going to try to go through the names that I highlighted on the liquid momentum focus list, give you a little sense of how I would approach them as a swing trader, and a couple of names that I'm looking at, the key inflection points going on. So I'm going to hop off here just for a few minutes, see if I can get Gavin to jump on before he says au revoir to us.